So there are many strategies out there. You'll see them across the board all over YouTube, more than probably 1,000,000 strategies. And the problem is that people just keep following, jumping from strategy to strategy, looking for this holy grail, indicator after indicator, and all these types of things. And I talk about this a lot because the more you simplify your trading, the better and the easier it will become. It's a fact. The more that you trade, the better you become a trader, the less noise that you need. And that's because the more noise equals more decision making. And you're going to get decisional fatigue. It's going to wear you down. You're going to get frustrated, and you're going to be looking for far too many confluences for you to get into a trade. So in this video, it's going to be a short and sharp video. I'm going to break it down because I do a lot of all psychology stuff. But at the end of the day, my psychology is on point because the system that I use allows me to stay in control of my psychology. So as you can see on this chart right now, this is what I look for. This is how we trade in our community. This is how I help people get rid of all the mess and simplify their trading by trading from key levels and looking for one strategy. When you go on YouTube, I see traders sometimes, they have a different strategy every single video. And no one really questions why each video they do is a completely different strategy. Well, chances are they're probably not trading all those strategies, and it's just for entertainment purposes only. This is for entertainment purposes only. Don't take any financial advice and just start jumping into trades. But the fact of the matter is, when you know how to trade, you only need one or two systems. I actually believe you only need one way to trade, but some people may want to flip and flop between one or two or three, depending on market conditions. So for me, it's been very, very simple. I've gone through the mill, the divergences, the high leveraged, the swing trading, the stochastic RSI, the Elliott wave, the EMA crossover, this candle formation, that candle formation. And after trading for 10 years, 5 years full time, it came down to one simple thing. Know where the big players want to trade from. Now, I'm not going to show you Bookmap in this video because that's not what I'm going to do, because in Bookmap, I can show you where the liquidity is sitting, and that's level 2 data. But what I'm going to show you is my precision system. Now, what I do is I look for key levels, the same levels every day, and I look for an entry within those levels. And as you can see right here, this is a precision system model, the PSS. And what you've got here is a session, highs and lows, previous daily highs, previous daily highs, previous daily lows. I'm looking for a sweep. I don't want no noise. I'm looking in Asia, in London, and New York. Now, I don't trade New York, but the reason is Asia, London, and New York, because session highs and session lows can be swept. Now, on the first, you can see just here, what I'm going to zoom in just here, is this. This is my short opportunity that I'm always looking for. I'm always looking for resting orders on Bookmap to be sitting at a key level. Now, that key level could be a previous daily high, previous daily low, Asia high, Asia low, or if you trade in New York, it may be a London high or a London low. I'm not going to get into a Fibonacci as of now. So they're your key levels that you're looking for. And those key levels will line up with TPOs and settlement and all these other terminologies that you see across the board, previous daily point of controls and point of controls. And the money is always sitting in and around these key areas. So what I'm looking for when I'm trading is I'm looking for price to make its way up to form liquidity up to a key level. Then I'm looking for longs to get trapped, which is this red bubble, where my resting orders are on Bookmap. And then I'm looking for a break back below and then a retest of that key level where orders were resting before. Then I'm looking to short the market. Now, when I look for, obviously, longs, I go and then look for the opposite, which means I'm building liquidity, I'm forming liquidity all the way down, all the way down, all the way down. And then longs, shorts will get trapped at one at a resting order. We will reclaim a level, and then I will look to obviously try and get into a trade from a retest and then a move back up. And the reason you can see that this move back up and this move back down are fast is because the liquidity that has been formed creates a very fast move back down. And the liquidity that has been formed here creates a very fast move back to the upside. And these sell orders then become buy orders, and these buy orders then become sell orders. That's how the market moves. So what I'm looking for is I'm seeking to see where liquidity is, because the market must move where the liquidity is for its next move, whether that's to the upside or whether that's to the downside. So to keep it very, very simple, I'm going to go over to the charts. What you can see right here, I've already done this, so I'm not going to bore you with all this TA stuff because I think that's boring. but it's what you need to be doing to get your edge. Once you've got your edge, don't spend no more time trying to work on loads of different edges. Work on how to stay out and then get in of the market on a psychological level. So what you can see right here now are just lines that were marked as session highs and session lows. And as you can see here, if I just put a session high and session low, you'll be able to see that that was there was the Tokyo high, which is my Asia high. So let's just get rid of that right now. So what I'm looking for, as always, if you look at the diagram, I'm looking for price to make its way up and give me some liquidity, okay? And what we see here is a reclaim of the Asia high. That line, remember, is the Asia high. So once I come back below the Asia high with this, I'm then looking for a retest of that level, and that's where my short's going to go, and I'm going to be targeting the lows below. Again, remember what I spoke about just earlier on the diagram. I go up, I come back down. I'm looking for any sort of short in this level here, and that's what I'm looking at. And that one gives me a 2 or 3R, right? But I'm aiming for a 1.8, 1.7 to 2R. Then I'm going to move my stop loss to entry. So that's just one example of waiting for a session high or a session low. And there's many, as you can see right here, I do exactly the same here. We have a lot of chop. As you can see right here, we move to the upside. We grab this low. We have this chop, a lot of wick. This then happens in New York, takes out my Asia and my London, gives me an opportunity to then take the trade once we break down here, and then I can get into the trade again by showing you with a short opportunity down in here. I'm looking to get in short in here. I don't really want to have that big of a stop loss because I need to make sure that these are the lows. So I'll bring that down a little bit to there, see what happens, and then I'll move to the downside. There's also this opportunity, what happened before. What did I say when we moved to the downside? Accumulation, 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 accumulation. Bang. Then I'm going to get what I'm looking for. And I'm looking for a 3-candle formation, which I call the 3CF, but I'm not going to show you that in this video. I'm just going to show you where you should be trading from. And then as you can see, we move up and then we hit that. So there's your 1 and there's your 2. Main trades, 2, 3 R's, and you're done for the day. You only need 2 or 3 of them in a week, which is fantastic. And as we go on, you can start to see exactly what I mean. We got another opportunity here where price starts to make its way up, way up, way up, comes, loses this. Then I'm looking for a retest here. And as you can see, I then get the opportunity to short the market again after the trap has been set. And I'm always going to be targeting the main lows so I can give myself some room here. And then if it continues with a runner, that's what I'm going to be doing. But I'm going to be paying myself as I go down. I'm not adding to the trade. I'm not worried about which way it's going to go. I'm taking my profits as the price is giving me evidence that it's breaking each pivot as we go along. And again, you can see just here, this is another opportunity. A little bit wild, this one is, because this is the New York Open. But once we lose the key level, again, what has happened? Build up, build up, build up, build up. Key level broken. I'm looking to short, and then I'm looking to take out these lows. But again, in the London session, which was beautiful, what did we have? We have an Asia low just here. We then have a sweep, and then we move back to the upside, reclaiming all that move to the downside. And every line that you see on here is either a London high, a London low, or an Asia high and a Asia low. Now, I add many, many other things. I previous daily high and previous daily low on my key levels. We look at the daily open, and you may have the Fibonacci. But the main thing is to simplify the way that you trade. Here is another perfect example. Overnight Asia session moving to the downside after New York. What happens? Asia opens, we get back above the Asia sweep, and then we just rally back to the upside. Another opportunity for you to lock in some serious gains. Now, people always want to try and catch the 3R or the 4R or the 5R. This is intraday trading on futures. And if we can get 50 points 2 to 3 times a week and make sure our risk is on, then that's all you need to be hitting that 5-figure month. No doubt about that. And if you stick to those simplicity rules and the simple way of trading, that can be achievable, especially when you can compound your accounts over time. Now, you know, I look at the 100-tick chart and I look at Bookmap and I look at other things, but at the end of the day, That's once you start getting to a level and you can then put everything in line. What traders do, what I did, and when I get a lot of people in the background, they want to try and do everything. They want to try and learn everything at once. And that's not going to be the case, because that's where you become overwhelmed. That's where you don't follow the rules, and it just becomes too much and too complicated. So that's why by systemizing and simplifying the way that you trade, you can then add level 2 data. You can then add the 100-tick chart. You can then add other confluences along the way. But the key thing is knowing where to trade from, because most of the people that come into trading, and it took me a very, very long time, do not understand where they are looking to trade from. And as you can see, start off with session highs and session lows, or previous daily highs and previous daily lows. And I have been trading full time now and coaching each of us. And I've been coaching this strategy for about 3 years now, and people continue to get payouts. You will continue to pass prop firms. Of course, you will lose accounts. Of course, you will blow accounts on days where you are not aligned and your neuroscience, your biology is maybe slightly off. But the majority of the time, you're going to be able to get into trades if you trade from the key levels. If you diddle in the middle, you're going to get hammered. If you diddle in the middle, you are going to get hammered. That is the middle. That is the middle. This is the middle. You do not want to diddle in the middle, because that's where retail traders lose all their money. And that's where probably you are at this moment in time. If you can't seem to find consistency, this is what you need to do. Well, firstly, you need to make sure that you're trading from key levels. Key level. There you go. Now, you may be in this trade for a little bit longer than you wanted to. However, as you can see, it goes in your direction. So what does it matter when you get out of the trade or in the trade? Because look where it goes in your direction. Yes, you're in chop, but you can understand that your entry was here after a sweep of the high. And this could go on and go on. And this is today's massive candle a few hours ago, because I just thought I'd do this video off the cuff because I like those videos. So the key thing here, my friends, is making sure you're trading from key levels. You don't need to look at this candle, inverted fair value gap, and all these things that are going on. Do they work? Yes. But are they overcomplicated? Yes. Were they there before? Yes. Somebody just reworded them. Nothing is new in this game. Just simplify a strategy, stick to that strategy, sit on your hands in between, which is the hardest part, which everybody will struggle with. I still struggle with. And allow the price to come to you. Look at the days, which are the good days to trade. Wednesdays and Thursdays are the best days to trade on the indices on futures. Now, if you need any help with that, you know there's a link below. There's also a free journal as well, which is really, really good. And we've got some resources coming your way as well. So if you need any help in making sure that you get where you need to get to by simplifying your strategy, which then allows you to stay in control of your mindset, hit the link below, and I will see you all on the next video.